Good morning, gang. Good morning. Welcome to today's Bitcoin update. First and foremost, big shout out to Prime XBT for sponsoring today's stream. Prime is a cryptocurrency, forex, commodities, and stock indices trading exchange. If you want to learn more about them, check out the link in the description. And if you want to get up to a $7,000 deposit bonus and 25% off trading fees, then use our codes down in the description. Okay, so we've had some excitement then since last week. Obviously the high time frame range has broken to the downside, which nobody could have predicted, but the overall trend was still bearish. So let's take a look at what's happening, what's been happening, and what we could see in the future. Obviously, first and foremost, everything discussed today is not financial advice. This is just for educational purposes only. This is my view of the markets. Right, now we've got that out of the way. Here we go. So, starting on the monthly. Well, we're broken the lows. Obviously, we're lingering just underneath the high time frame range. We're talking about last week, we were still within the range, and even if the range does break, is it a death sentence? Not necessarily, but let's see what's going on next. Weekly, obviously, taking out structure. Daily, obviously, taking out structure. So basically, all high time frames are in a downtrend. Right, let's go locally then. So obviously, first and foremost, we're in this range, and as we always do, let's throw in a quick volume profile, see what happened. And obviously we came back up. We didn't actually get to the value area high, which we were talking about on last week's video. And obviously we were looking for this region up here, the value area high. We didn't actually get as high as that. What we did end up doing is coming up to the EQ of the range. This happened over a weekend. So personally, I wasn't trading this. I actually entered a little bit lower. Once we started to see some bearish CVD divergences forming, and it turned out, it still worked out well in the end. Anything within this region, was an acceptable trade. It's the EQ. We did have resistance up here, and it's one of those things. In hindsight, you can say, well, every man and his dog was looking at this region up here. So what happens in Bitcoin when everyone's looking at the same level? Well, it either front runs it or it blasts straight through it. In this case, it's been front run. Okay. So that's what's going on. That's what went on, over the past few days. We zoom into the lower time frame. We had some fantastic trades in the group, and so proud of the team within the Spitfire community, because not only did we manage to short this breakdown here, we caught this ride back up. Everyone's getting bullish again, and then lo and behold, we managed to short this because it came straight into the previous day pocket at the time, or the previous day point of control, and then we came back down to the range lows. Now, as we were saying in previous videos, in fact I think we've been saying it for months now, what we were looking for initially was a swing fail of these lows, maybe a reclaim, and then you've got a long trigger there. What happened, if we zoom really locally and let's come down to the 1 hour, we did get this swing failure pattern. We did run the stops, obviously, of the June lows back here. We run these stops, and then we ran it back up. And just shy of the value area low, couldn't get back into the value area, turned around, and then we continued this downtrending structure. Okay, so as we were posting on Twitter at the time when price was down here, the only two options you have down here is A, either looking for longs, or B, no trade, because in Team Spitfire, we do not trade breakouts. That yes, if you did trade the breakout, in the end, it did work in your favour. But breakout trading is just not the way forward, typically speaking. So obviously, if you're in shots from higher, great, hang on to them. We did have a good take profit region down here, and we'll explain that. This is something we were looking at in the group. And we're giving the team the heads up yesterday, roughly around 3:15 in the afternoon. I was saying this is a new base channel. Drawing it in advance, and lo and behold, where did we come back to? Let's lower this down, and let's bring up this base channel instead. And we came down, and we bounced from this base channel. So that to us was an acceptable long scalp. Take profit 1 already, stops to break even, and then it's a winning trade regardless. So obviously if price does continue to go up, great, we take more profits off the table. If I bring back that previous range that we just had a second ago, there we go. Let's just change the colours to make this a little bit clearer. So obviously this is the old range. Let's make this in yellow. Hopefully you can see that on your screen. So if price does continue up, then gets to this now could be support flipped into resistance. So if you are long from down here and you've not already taken profits and price does keep coming up, then I'd be definitely taking some profits off the table here and potentially looking to add back into short positions, because this June low and the overall range low also lines up with the previous day point of control, which at the moment is a naked point of control because it's not being tapped. So if price does come up here, then this would be a region I'd be looking for again, A, taking profit on any longs, B, looking for adding into shorts. If price does manage to get back above here, then we're back into the old range. First, we've got this new EQ of this downward sloping channel. If it manages to flip that, I'll be looking up at the value area low. If it flips that, looking up at the point of control. Okay, very simple level to level. We're still in a bear market, so therefore it means that we're trading level to level here. Right, we're not hanging on to trades hoping for moon, because we've seen this and we've seen the Dinfluencer moon boys that have been longing all the way down here, trying to catch every single knife, telling you guys to catch every single knife at the same time as telling you to to buy their favorite shit coins or whatever they're doing. We just don't do it. We just wait. We wait. So what can we be looking for then if price does continue to go down? Well, first and foremost, let's just bring that back and let's just get rid of some of these squiggles. If price does come back down, then first we can be looking to see if this channel holds again. If this channel does break to the downside, then we can be looking for lower prices. Now, I'm not going to sit here and bullshit you guys and say I know exactly where the bottom's going to be, because quite frankly nobody does, but we can have some educated guesses, can't we? But regardless, whatever we believe that the bottom is, if this is the bottom or low is the bottom, regardless whatever we believe, we're not into catching knives. We're going to take the highest probability trades. If you guys are looking to load up on spot positions for the future, then what we want to see is we want to see a decent range forming. So we'll want to see, if you scroll back, we want to see a decent range forming, and ideally you want to see it on an uptrend on a high time frame. Okay, we'll call this accumulation. This is what we want to see. So I'm looking for like can't say that word on YouTube, otherwise we get banned, but these are the March 2020 lows, V-shaped. It could happen, but based on the current conditions, I'd always favour a range slightly moving upwards, with higher highs and higher lows on the high time frame. When you start seeing signs like this, then that's the time to potentially start accumulating. You've still got your risk management in place. You're not just, longing and hoping for the best. You still got your risk management in place, setting your stops. Because what if price does continue to nuke down? You're going to do hold it, like the people that ended up buying up here because, they got told diamond hands, hodl, 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 don't sell. And, lo and behold, they're massively underwater now. And they're thinking right now, oh, maybe I sell now. You should have sold when the signs were there. Learn how to understand the charts, learn how to spot, trend change. This was the most obvious trend change. Look, you got low, you got a higher high, then you got a lower low. Took out this low, then you got a lower high. You've had so many opportunities to get out now, but instead, you're too busy listening to these moonboy influencers. Sorry, I'm going on a side rant anyway. Right, so let's look at the lower targets. Right, so let's just clean this up. Hide this for now. Hide this for now. And we'll get rid of this. Now, what I'm going to do is I'm going to throw my volume profiles. So I've got all these marked out in advance. So, what can we be looking at here? Well, down here, I've got two sets of volume profiles overlapping. I've got this volume profile, which is based on the current history, which is only using the Bybit data, because obviously Bybit's where we trade. Okay, and then we've got the outer volume profile with the point of control down here, which is based on a higher time frame, which is also taking into account the 2017 high of 20k. So basically treating October 2020 to the 2017 high as one big range, because effectively that's what it was. It was one big range. So this is incorporating all that data. So what we've got to look for is the highest probabilities to where we could see a bounce. Now, there's a lot of people obviously on Twitter calling for 14k, which effectively lines up with this. Is this an area? Yeah, it's an area. It's possibly an area, but you know, it's fairly thin when it comes to volume. You know, because obviously we've got a batch of volume here, we've got a batch of volume here, but in the grand scheme of things, it's quite thin. It's quite thin. So that to me is not a favoured level. I'm not saying it can't stop here, but for me, it's not the highest probability. So in the group, you know, we talk about this in way more detail in the Discord, but obviously we've got this value area here. So what you've got to think of is if price does end up coming down to this level, then first and foremost, does it get a bounce here, this value area high? You know, this whole cluster here. In fact, let's put a box on, shall we? This whole cluster here. You've got a value area high. You've also got some high time frame SR levels within this. Let's go into the weekly so we can see this a little bit better. Zoom up. So we've got a cluster here of high time frame levels. We've got the value area high of both the 2017 value area and also the more local value area before the overall breakout. If that fails to hold and you don't get this, then your next thing to be looking at is if price does break down, doesn't get a reaction here, comes back and gets acceptance into this value range, then we can be looking at this consolidation point of control as a higher likelihood of a bounce. And if that doesn't hold, then we'll be looking at this value area low around here, which will be coming in roughly around 7.5k or 7.8k, give or take. You know, if that doesn't hold, then we'll be looking at coming down to the absolute range lows. Now, you know, if you're watching this and you don't know how to trade, and potentially you're still holding bags from right at the top, then, you know, this probably sounds scary, but, you know, if price does come down to these kind of levels, this is just an opportunity. This is opportunity. How many times do you see people whinging and complaining about, you know, traders, the original traders that were back trading in 2017, 2018 up until now, saying, oh, you know, you got lucky because you could buy at these levels. You know, well, what if price does come back down to these levels? And you can't really complain about them because then you've got the opportunity. Now, does that mean, you know, if price does come down to these kind of levels that I'm just going to be putting a position here and saying, yep, there we go, move? No. Because what I want to see is I want to see price come down and I want to see if it gets a reaction. If it gets no reaction and it gets acceptance back into this value range, then I'm just going to trade this range. You know, we'll trade this range until it breaks. If it does get a bounce here, oh, let's get rid of that. If it does end up coming down here, then, you know, we might have a new range forming here. We don't know. We don't know what's going to happen. All we're doing is we're looking for the highest probability levels that's going to get a reaction, and we trade that reaction. It's as simple as that. Okay? So, you know, price could still turn around from here and go off. Absolutely fine if it does. Then we're just back into this range and we just continue trading this range until it breaks again. You know, it's just level to level. Don't overcomplicate things. Look for where the volume is and trade where the volume is. If there's no volume, there's no trade. You know, the amount of people watching order flow yesterday, the amount of people that were longing. In fact, let's get rid of this and let's let's come back out to here. The amount of people that were longing all the way down on this was crazy. You know, price. Bring up CVD. Let's bring up open interest. Price is coming down. It's making lower lows and lower highs and coming down. And yet we can see, if we look at CVD alone, we can see that it's making higher highs. So therefore people are market longing into this as it's coming down, because they're trying to catch wicks. They're trying to get the clout of catching the bottom, and yet they've got no real technical analysis to back up why they're longing down here. They're just longing, hoping that they're catching a wick and then that's it, it's going to go. You know, the knife catching. But all it does is continue going through them. It's just adding fuel to the fire. The other thing we keep getting asked as well is, you know, what's going on with the whole FTX, Binance saga. Quite frankly, the answer is I don't care. I really don't care. Yes, for anyone that lost money, yes, it's absolutely crap, and I feel for you. But this happens time and time again. You know, the warnings are always there. The warnings are always there. Don't keep all your portfolio and all your capital on an exchange, because it's not yours. If they're holding it and something happens to that exchange, you lose it. Only keep on an exchange what you're trading with. The rest of it, keep off the exchange. Okay? But, you know, what's going on here is, you know, it might be fueled by that. It may be fueled by that, but the charts still conform to the levels that you've marked out in advance. You know, the levels up here, the bounce that we got down here. You know, it's irrelevant what the news is. You can still trade purely from the charts. Okay? You can't trade from the news. The news doesn't give you a stop loss and entry, a take profit, invalidation. It doesn't give you that, but the charts do. So ignore the noise that's going around on Twitter, on Instagram, on the telly, whatever it is. Just ignore the noise and just trade what's in front of you. Other thing to note, obviously, if you guys want to learn how we trade, then first and foremost, come check out our free Discord. In our free Discord, there's loads and loads of ideas. If you do want to take your trading to the next level, then check out our website, and obviously within the website you get access to our private Discord, where obviously you get me posting in real time. The other thing that I want to give a shout out is I want to give a shout out to our guys, and you know, some of the guys in the private group that's learning from our course. I'm unbelievably proud of these guys. Absolutely proud. And you know, I'll just quickly read you this. Cause this is something I posted this morning. I've just put, can I just stop for a minute and say how proud of you all I am? The TA, the wins, the journaling, the community is second to none. You know, seeing you guys smashing this makes me genuinely smile from ear to ear, and it really does. For most of you, this is your first bear market. This is the time when dumb bulls get everything back to smart traders. And for you guys to commence your trading career in a bear market is effing amazing. Keep grinding, keep your heads level, and bring on the next trade. Let's effing go. You know, absolutely. I'm so proud. So proud of the team, you know, absolutely smashing the trades. Purely from TA, that's been taught in the group, you know, and some of the guys, you know, just in the free group, just picking up stuff in the free group. Obviously, if you do want to learn along with us, then check out our website. The link's in the description below. And if you go onto our website, then you get access into our video library of educational content. And now there's over 60 hours. You know, there's everything from, you know, basic introduction, which includes, you know, position sizing, journaling, risk management, you know, through to Fibonacci, volume analysis, how to counter trade patterns. You know, this is one thing that's a fantastic thing, because obviously we like to counter trade the influencers posting these simple retail patterns. You know, we've got access to order flow. We've just finished the Elliott Wave series. We're just about to start a new series, which is going to be trading psychology. And you've also got access to all our cheat sheets, including daily checklist, trade journals, position size calculators, all the harmonic patterns, all our EXO templates. So yeah, and then obviously every other week then we do a chat and chill stream where we map out my swing trade ideas, and we've also started looking at more local ideas as well. So obviously, if you guys want to get access to that, then come check out our website. Links in the description, spitfiretraders.com. And that's about it, guys. So, if you've enjoyed today's content, then hit that like button. And don't forget to subscribe and hit the bell. And until next time, gang, as you were.